Welcome to the Mortgage Know podcast. My name is Kimberly Hawes. Today we're sitting down with Nadia Aziz at Ocrolus. Nadia, have you start by just telling us a little bit about yourself and about the company?
Sure. Thank you, Kim, for having me. I appreciate it. Just by way of quick introduction, I am the GM of mortgage at Ocrolus. So Ocrolus is an AI-driven workflow and analytics platform. We operate in the mortgage industry. We also have business units that support small and medium business lending, as well as consumer lending. Our goal is to help lenders scale more efficiently, lower cost, reduce risk, and enhance the overall borrower experience. We sit at the center of one of the most complex parts of the lending process, and that is taking borrower documents and converting that into decision-grade data that can then be used throughout the process. Our focus in the mortgage space has been very much around sort of that middle office, underwriting, processing, things that are very manual in nature. But we have recently started moving more up funnel and creating capabilities for loan officers so that they can engage with borrowers in a more informed way. And have also started looking more down the funnel where things like closing and post-closing that are, again, very labor intensive, very time intensive, and are ripe for automation. So that ultimately we're not a point solution, but rather we are the sort of AI infrastructure layer that sits across the entire origination process from beginning to end.
Right, exactly. And so people can use one particular set of ways of doing things across the board, it sounds like.
That's exactly right. So rather than having to, first of all, engage with multiple vendors for different point solutions, I think it just sometimes is more sort of practical. But there is also efficiency, right? Because you're not repeating the same thing that happens in a mortgage. For example, you calculate income multiple times. If you have a different solution that's calculating income in a POS versus a different solution that's calculating it further down, that's just inefficient. And so that is kind of one of the reasons why we look at the entire solution. It's kind of like the whole is greater than the sum of its parts, is kind of how we think about it.
Right, right. That makes a lot of sense. And so, as you know, this is the time of year where people are typically applying for mortgages, because the busy spring and summer season are here. We started off the season with a little bit of good news with a lot of applications and refinances because rates dropped a little bit. It looked like things were going to go really well. And of course, over the course of the last couple of weeks, rates have increased. By the time this podcast airs, who knows where we'll be, right?
Very
Right?
true.
That's just 2026 and modern life. So how can lenders start to overcome some of these sorts of challenges when it comes time for a busy season? They know that they're going to be busy in a typical environment. It may not look busy, it could look super busy. How do they overcome some of these balancing challenges?
Yeah, having been a lender myself in the past, Kim, I think that's a very appropriate question. And I think that, coming into 2026, I think most lenders were cautiously optimistic about how rates would, come down. We would see an increase in volume. The circumstances of the last few weeks have certainly changed that. You're absolutely correct that we saw a nice dip in rates and a significant increase in volume, and that has tapered off. So I think that lenders are still cautiously optimistic, but maybe slightly more tempered. As you know, this industry is very cyclical in nature. That's just sort of inherent. I think what has happened more of late is that the frequency and the intensity of the changes is a lot more. And that is something that I think lenders need to address. I think the traditional way of solving for that was you hire more people as volumes go up, and then you lay off people as volume goes down. That isn't a quick way of solving the issue. It's not a cheap way of solving the issue. It certainly is disruptive from a morale and a culture perspective. And so I think lenders are recognizing more and more that you have to find a way to solve for that through technology. And that's kind of how I think about, the tools and the platform that we are building. It's really to me like a shock absorber, right? So that as volume fluctuates, you're not suddenly scrambling and have a situation where you end up going off the path and have to have longer cycle times or make a mistake because again you weren't able to adapt quickly enough with the higher volume that was coming in. So really looking for that sort of shock absorber as I describe it for managing through those fluctuations. And I think that operational leverage that technology provides, I think, is what the competitive advantage is that lenders will have, right? So really being able to manage margins even when volume is low, but being able to scale efficiently when volume is high. So that's kind of at a sort of a high level, how I think about how we've done things in the past and kind of the need for us to adapt and leverage and utilize the capabilities that AI allows us to have to manage through those ups and downs in a much more effective manner.
Mhm. Really like how you describe it as being kind of a perpetually cyclical cycle. This is nothing new. I can remember during the pandemic when rates were super low, everybody was scrambling to get anybody they could, to work because everybody who was working was just working around the clock that particular point in time. So even between then and now, we've seen so many incredible upgrades in technologies and ways that people are scaling, and every company is doing things a little bit different. What's working the best for your clients?
Yeah, I think what we have focused on are what are the main things that drive inefficiency, that make scalability a challenge, that, increase costs. As the cost of originating a mortgage is still in that, 10,000 plus range. A lot of that, gets borne also by the borrowers. I think the borrower experience, I think that is something that is incredibly important that lenders think about. So we try and think about what are the things that are most critical in achieving scalability, in achieving lower cost, in reducing cycle time, in reducing the risk that exists as you're doing originations and increasing that borrower experience. And so there's sort of three main areas that I think we focus on and try and solve for, recognizing that AI fundamentally is very helpful in situations that are high volume, repetitive kind of manual tasks. That's where you see AI really coming into play, and being able to create a lot of leverage. But again, the three areas are, first of all, being able to provide clarity and certainty sooner in the origination process, right? The more that you can create that upfront, the better it is for both the lender as well as the borrower, right? The borrower knows that they need to provide additional documents. The borrower knows that they may need to find an additional source of income or a co-borrower early on rather than it becoming an issue sort of at the last minute, right? So clarity and certainty sooner, I think, is really important. And that's kind of the things that we focus on and the tools that we build and we enable. I think the second piece is really around just the automation of very manual tasks, right? Things that are, again, require a lot of human effort, but can be solved through automation and AI. Let's focus on those. So things like document classification, right? Taking apart a large PDF and putting it into its individual folders within the loan origination system, rather than having that be done manually, you can do that automatically. It saves time, saves effort. Things like income calculations, again, very much a task that is completed on every single loan. AI can help with creating efficiency and accuracy in that space. Humans can make mistakes. Through machines, you can remove some of those possibilities of having two different people underwriting and calculating income for borrowers in two different ways. So really looking again at those kinds of of tasks that are very sort of labor intensive. Conditions is another one that is very, very labor intensive. And that then brings me to kind of the third thing that we focus on, right? Which is how do you reduce sort of the back and forth, right? And that is really something that adds a lot of time and effort to any loan origination process, right? The more you have to keep going back to the borrower, getting more information, keep going, to the processor and having them get more documentation and look for it. All that rework is one of the biggest drainers of time in any mortgage origination, right? So looking for the places where there historically is a lot of back and forth, and how can you reduce that, right? So a simple example of that is conditions, right? Which is basically based on what the guidelines are that are applicable for the particular loan that the borrower is entering into. What are the conditions that have to be met, right? A lot of back and forth happens with borrowers through that, sometimes unnecessarily, right? The document is there, the information is there, but it's buried somewhere in some folder and someone didn't see it. And then they ask for that same information again, right? I think any survey that you look at from borrowers and what is their biggest pain point in mortgage originations process, it is, I'm asked for the same document again and again, right? And many times it's not, that, the document wasn't there, it's that someone missed it. And so I think that is very important for us to think about. So those are the three main things that we are looking at, think, okay, where can we build solutions that help lenders across all of those three big dimensions?
Mm. Yeah, and it really boils back down to that customer experience. It sounds like everything you do is focused towards that, and rightfully so. That's what successful companies are doing nowadays. You pointed out one particular pain point for a lot of customers where they're asked to resubmit documents again and again and again. As you look forward, though, to the next generation of borrowers that are coming up, Gen Z and young millennials, the younger side of the millennial group, what are some of the things that they're looking for when it comes to the lending experience, especially since they live in a day and age where they don't remember life without cell phones?
Yeah. Yeah, it's a great question. And I have millennial nieces and nephews who always like, question, why do I carry a notebook around? Like, why do you need paper and pen? So I fully
Exactly, right. These are the questions that we are asked because we do carry around
we
paper and pen.
I certainly do. But I think that's a really, really important point that you raised, right? And I think that there are a couple of things that I think are going to be, part of the future, right? I think the first is just, why do I even need to fill out a form, right? Like, what is this sort of, set of, 50 fields that I need to complete? Here's my information. Here's my driver's license. Here's my W-2. Here's my tax return. Fill out the form, right? So I think being able to automatically complete an application without having to actually enter a bunch of data, I think is something that is going to be much more what the next generation is demanding. It's sort of the parallel that I would draw, Kim, is like when you apply for a position at a company and they ask you for your resume, you upload your resume and then they take the information from that and pre-populate, the form that is part of the application. It's a similar concept, right? Let me provide a bunch of documents, pre-populate the information, and I don't have to fill out everything. There could be one or two fields that are highlighted that the borrower then has to fill out. But otherwise, to your point, here's my phone, taking a picture, done, right? So I think that's kind of the first thing. I think the second thing is that, going back to the point around clarity, certainty sooner, and the fact that borrowers are being asked for documents repeatedly, if we can let borrowers know right away that the document they've provided is in fact the correct document, or no, it's not the correct document, I think that is another thing that is really important, right? I provided my W-2. Now, I didn't realize that I provided my 2023 W-2 and what you needed was my 2024 W-2, but you're telling me 4 days later that that is what was required. In my mind, I've already provided you the W-2. Why are you asking for it again, right? So I think being able to surface information sooner is really, really important. And that is both on the document front, but also things like is my income sufficient? Do I need to do something more? You know, conditions that can be surfaced sooner so that I, as a borrower, know that I'm going to need these additional documents to move my loan forward rather than, at the last minute. Anyone who's been in mortgage lending has had that unfortunate experience of having to call up a borrower and let them know that their closing has been delayed. I've had to unfortunately do that more than once. I mean, that's not a great experience, right? Buying a home is in any case, fraught with emotion most of the time, right? There's some life event that's happening that is causing you to, buy a home. And for a lender to then create all of this stress and confusion and, oh, by the way, we're going to have to move your closing date is really not the experience that, you want to be able to deliver. So leveraging all of these capabilities to just give that insight, information, expectations earlier on, I think is, what I think the future generation is going to very much expect because that's all they've known, in all honesty.
Yeah. And I don't think it's just Gen Z. I think I'm a young member of Gen X, but I think even us at this point in time, like, how come if I upload a document and it doesn't say 2024 tax returns, doesn't the system kick me back so I can find the right one while I'm still in that folder? Because I already had to drag that folder out if I do physical stuff, or I had to look it up on my computer through my personal files. And
Exactly.
most of us are so busy balancing the work, the family, and trying to get outside and get some sunshine when the weather is good, right? Like, you don't want to be spending your Saturday morning f- solving problems that could have automatically been pinged, like you said, from the get-go. So
Absolutely.
I'm excited to
Absolutely.
see where the technology brings everybody, not just for the younger generation, and of course, especially them, because they are going to be the home buyers of the future. But the rest of us, as we age as well, if you want to do something different or get a HELOC or refinance your home, may not be exactly up your alley, but hey, like, let's make it easier for everyone, right?
Absolutely. And the everyone includes the processors and the underwriters and the loan officers, et cetera, right? I
Mm,
think AI is not meant to replace human judgment. You're not gonna, have AI that can, make it so that an underwriter doesn't have to still, figure out some nuanced case that comes along, on a regular basis, right? It's meant to enable them, it's meant to allow them to actually be more productive and spend their time on the things that actually require that human judgment. But again, you're using technology to surface those things for them so that they know where they should be spending their time and not instead having to look at stuff that was pretty straightforward, pretty plain vanilla, and can be handled, by leveraging AI and automation.
yeah, exactly. Let's give those loan officers, let's give those brokers the tools that they need out there with, especially when it comes to AI. There's some really great advances, and I'm sure there will be many more to come. As we wrap up today, is there anything else that you'd like to add at all?
Yeah, no, look, I think that, as we talked about, the cyclical nature of this industry is not going to go away anytime soon. I think the lenders that are able to build the infrastructure that absorbs those changes effectively, and is able to, as I said, give a better borrower experience. I think they're the ones who are going to be able to take full advantage of, the downturn in rates that I know is coming, and be able to, have a great outcome again, both for them as an organization, but also for their customers.
Absolutely. Well, thank you so much for your time today, Nadia. I really appreciate it.
It was great chatting with you, Kim. Thank you for having me.
Yes, thank you. And thank you, everybody at home who has been listening and all of our readers out there. Once again, my name is Kimberly Hawes. Have a great day.